Thank you for your patience, Pedro. Welcome back.
Thank you so much, Dale. My pleasure.
Great to reconnect with you and catch up. And why don't I start with this? What's top of mind for you this week? Is it the ECB?
No, it's actually the CPI.
Okay.
I'm a US focused guy.
All right.
So for me, I'm focused on what I call the Fed's uh either an unpivot or a reverse pivot or maybe a pirouette. But
Okay.
the idea that the Fed has gone from being fairly eager to cut rates to being somewhat reluctant to cut rates to being quite reluctant to cut rates. And I think, tomorrow's CPI becomes pretty make or break in that context because I think in economists' minds, you can't go off one data point. Two don't really make a trend, but three you can kind of draw a line through. And so if we get
Yeah.
a worse than expected outcome tomorrow, then I think the timeline for rate cuts gets pushed even further back than it already has. And the idea of three rate cuts becomes even less plausible.
I'm reading from Fed Guy that they are going to de-emphasize the employment report, one of their mandates, right? Because of the flow of immigration, that it's going to continually uh, show good numbers, which would put them on a tightening path. So they're going to de-emphasize it because of that, and the CPI will become more important than employment numbers. Are you hearing the same rumblings out of the Fed so they could not be have their hand forced by a strong jobs market due to immigration inflows?
So I saw that blog from Joseph, and I think I agree with him to a certain extent. And so I do think that the inflation numbers are more decisive to the outlook for rates for now. And the Fed has embraced, to his point, the Fed has gone from talking about the need for economic pain, which is the focus of Jay Powell's
Yeah,
Jackson Hole speech in 2022, to kind of
yeah.
embracing the soft landing story uh, more, more positively and actually thinking that they could land this thing pretty well. The way I think that the employment market still matters is the job market could be a trigger in the reverse way. I just did an article about this. So I do agree that a strong job market won't dissuade them from cutting necessarily if inflation keeps coming down because they are embracing this idea that they can get kind of benign employment growth that is non-inflationary and doesn't generate excessive wage growth. But I do think by contrast, if employment deteriorates fairly significantly, they will use
Okay,
that as an excuse to cut more aggressively than they would have
okay,
otherwise if they were just responding to the inflation outlook.
okay. Interesting. So it's a single-edged sword, not
Exactly.
double-edged anymore. They took an
Yeah.
edge off.
Yeah.
Okay, so what else in the U.S. And do you think that this number could be sticky? I mean, gas prices are going up again. WTI has had a pretty nice run over over the first 4 months of the year.
I definitely
Yeah,
think there's a risk it'll be sticky. And if not this number, then surely the next report, because of the factors you just recently cited,
yeah,
you didn't even mention shelter costs, which, despite repeated predictions by policymakers that they were about to ease up, they have not. So that's another increasing source of concern. And so I
yeah,
do think there's a prospect for numbers to get sticky and for the timeline to get complicated because if the Fed doesn't, we're already having doubts about a June, July move. And if you don't have a June, July move, you get into deep into
yeah,
election season. And the Fed is probably loath to begin an easing cycle, like say in September when, the election is in full swing. And so I think here's the way I'm looking at it is like this, Dale. Basically, there because we're getting to the point where the rubber meets the road. There's an increasing division within the FOMC. There are folks who the more dovish camp they actually still believe in the policy lags. They think policy is quite restrictive, and they think inflation is likely to keep falling. And Chair Powell is in that camp, and he's called these first two numbers, bumps on the road, but he wants to get more confidence that they're coming down. I think he's got people like Adriana Kugler and New York Fed President John Williams at his side. But there are the hawks who think that, this strong job market and strong economy, mean, as Chris Waller has put it, that there's no rush to cut rates. Mickey Bowman agrees with him, Loretta Mester. And so there are even folks like outside the Fed, but formerly Fed people that I've spoken to who think that the Fed might actually, and here's the
I
crux of the matter. The issue is where is the neutral rate, right? Because if you believe the neutral rate
yeah,
is risen significantly, as a lot of people do, then the Fed might not be as restrictive as they think. And financial conditions are arguably fairly loose. And so if they're not
yeah.
that restrictive, then maybe they need to stay higher for longer or even potentially hike again at some point down the line.
Okay. So there is a camp, no cuts this year. I tell you what, Paul gave bad advice to millennials when he said, don't buy a house now, a couple years ago when he embarked on the tightening campaign, because they really didn't come down much. And now rates are much higher. And now prices are actually heading up again. So it's a good thing he decided not to go into real estate.
Well, there really hasn't been a reprieve in the market, as you say. Like there
Yeah,
really hasn't been an entry point for that, which is why
right.
the median age of the first-time home buyer is just rising and rising and rising. Another thing I'm
So,
paying really, strong attention to, Dale, is the kind of fiscal side. I think
okay.
the Fed and other folks are really underestimating the extent to which strong fiscal policy in an election year where there's every incentive to spend in every way possible and to continue to juice up spending from past programs. The extent to which that is countering the monetary policy tightening, I think is really important. And we need to keep that in mind. And that's unlikely to change anytime soon, which is why you can kind of see an economy that doesn't necessarily, where inflation doesn't really come down that much, but growth doesn't potentially falter, and job growth does stay strong. So
Yeah, the infrastructure bill is keeping a lot of construction workers busy
it is.
and need for more. And that doesn't go away in a year, does it?
Exactly.
You know,
No, it
so
doesn't. In fact, it sometimes it only gets started in a year, a year
right.
after the legislation is or more. And so there's definitely this lagged effect that keeps kind of petering through down to the state and local levels. So
Okay. I want to ask you a question, and I know you're U.S. centric, but the whole world is focused on one price in one currency. Can you guess what I'm going to ask you about?
the yen.
Yeah, Pedro. All right. So, this
So,
152
all right.
level,
What's my prize?
your prize is you could interview me anytime you would like and ask me a trick question too.
Sounds
So,
good.
52, jawboning. People are afraid to trade it right now. So, maybe the inflation number finally gets us a resolution. Do you think they're going to come in and spend some money if we take out 52, or they're going to let it go? And it's like, certain people say it'd be like a dam bursting, 30-year levels, and we could head dramatically higher.
I mean,
Um,
as you mentioned, I'm not a Japan expert, but my sense is they would intervene if needed. If the John boning fails, I
yeah.
do think they're going to attempt uh, to keep the market
Will
stable.
the Fed help them in any way?
No, I would say coordination at that level is a kind of a fanciful notion. They coordinate
Okay.
insofar as they have like frequent phone calls with each other. They kind of tell each other where they're headed, but you know, they don't
They could talk
coordinate.
more like doves. They've done that before when we've been at critical areas in the end.
I
Um,
mean, yeah, if I mean, let's put it this way. If there were some kind of globally destabilizing effect on financial markets from those moves,
yeah,
that might change things. But then they would just they wouldn't attribute it obviously to the yen. They would just talk about financial conditions shifting generally and justify it from that perspective.
Okay. You have any impression about gold making new historic highs? It still is money, and really, look at that move in gold. Is it
I'm
all
as baff
geo?
What's that?
Is it all
It
geo risk?
it seems that way. I mean, I'm as baffled as the next person. I've seen the lists, the various lists of possible explanations. The notion of central banks diversifying away from the dollar gradually because of concern over the Russian sanctions seems fairly plausible. The kind of general flight to safety, but there's also some counterintuitive aspects to the gold rally, right? In terms
Yeah.
of how the bond market is behaving. And so I don't know, but I guess, if you're a
Yeah.
gold
Okay.
bug, now is your your moment to shine.
Yeah. Every dog has its day, and talking about uh, what's going on with gold. The dollar's been pretty stable during it, even rallied
Yeah, you
with
really
it.
have.
So, that too is a little bit unusual, especially for silver. Gold can rally with a strong dollar, but I've rarely seen a bull market in silver without a bear market in the dollar. Um, you buy the de-dollarization story?
Not as a short-term theme. I mean,
Okay,
very long run, I think there's gonna be,
okay,
nobody's on top forever, ever, but that's like a decades long story,
okay.
not a tradable one, you know?
How about the Fed introducing CBDCs by the winter?
No, I think that they're
No,
not up for it. If you listen to Powell, like he's a skeptic.
is he?
He's like,
Oh,
yeah, I think they're all kind of unconvinced. He's a skeptic. Waller, who's very important and influential, is a huge skeptic. He's like, he always talks about how, he doesn't understand the use case for it. Kashkari is very skeptical. So I'm not sure. It's actually very interesting how different the Fed's approach is to that of, say, the PBOC or the ECB.
yeah.
They're embracing it much more wholeheartedly, but the
Why
Fed,
do you think that is? Because they really don't have a federal union and it's only a monetary union
it
in
might
Europe?
be, but I honestly think it's in part because the banks still want to lose their role in the financial system, and they see the
Okay,
CBDC as potentially challenging some of the bank's core activities, and of course the banks have a lot of influence on the Fed. And
okay.
so that I think that might have something to do with it, but that's just kind of speculation. I'm not sure.
Any view on the yield curve action, Pedro?
I really don't. I guess the big picture is just that it's yet another one, just like gold, it's yet another one of those post-pandemic, um, strange things that we haven't seen before, a yield curve that was inverted for as long as it was and with no economic downturn in sight. So Uh,
Okay,
it's kind of another oddity of this post-pandemic era, but I don't have any particular insights
okay.
beyond that.
Because I look at the 2 year and then I look at TLT, and uh, this almost looks like, if it held here, that we could even challenge the October highs,
Yeah,
and TLT. The 10 year kind of looks like that even more so. Um, but for some reason, I believe that we're getting close to some type of bond buy. Here, I'll just show you here the reason why on the TLT. So
yeah,
here's TLT. Okay, so just tech as as a technician, we had this big rally starting last fall. Finally, the bonds bottomed,
hmm
and we've been heading back down. To me, looks corrective, and that as a technician, I'd be trying the long side of bonds
yeah.
around here, expecting something like this to
I see.
happen one more time.
I see.
Whereas I look at the weekly in the 10 year, and to me, we're getting some decent breakout action unless we close back under 433. But when I look at the weekly, you could almost make a case that we could try the October highs again.
Yeah, well, that's
Maybe we
let's
go
put
to,
it this way. One of the questions that is now back in my, my sort of rotating list of questions for sources is what's the kind of is there a kind of breaking point for the banking sector again? Is there a new threshold for pain in the banking sector if yields keep going in this direction?
and what do you think?
Where regional banks run into trouble again, and now there's no more Fed emergency facilities, so they
That's what we talked about last time, right?
um
Yeah.
yeah,
So
so
here's a weekly regional, and compared to the rest of the market, being parabolic during the same period, right?
yeah,
KRE, the regional banks, only got back to where they had the problem. Okay, only retraced back to it,
yeah,
and so they start taking out 45. You know, Ellioticians would say if this is all it has is three waves, is
yeah,
bearish. So that's an interesting thing to be watching. And that's probably what's holding the Russell back. I know a lot of people want to be long Russell, but a huge part of the Russell is the regional banks.
yeah.
So what level do you think rates would
I
cause
think we're
something like this to happen again?
I think we're already getting there, right? I think it's, 4 3/4, 5.
Okay. On the 10-year or
Yeah,
the two?
on the
On the
10 year.
10-year.
Yeah.
Okay. And they're probably, you know, have had some relief because of that bond rally. But
Yes,
if I'm
yes.
wrong and the bonds are, going to retest the lows, um, which, is possible on the weekly chart, it looks like, we had this, we could have, some one more bond crash
Yeah.
down here.
Yeah. I mean, yeah, you were just an indicator. The market's become so sensitive to economic indicators because the Fed has become so data dependent is not even the right word anymore. It's kind of data reactive. I think we've spoken about this before. It's just
Yeah.
every indicator matters really, really, really a lot. And so when you put that much weight on individual reports, you get you create more room for volatility.
And the auctions have been going fairly well, though, haven't they?
They have.
Bid to cover has been good. Uh, who are the buyers?
Uh, I'm not sure. I haven't actually been digging into the granularity of who the buyers are.
Okay,
Um,
because I mean, we're
but I
only going to
think
have increased offerings. Um, why don't we switch gears? What do you think is behind Yellen's visit to China? The real reasons.
the real reasons.
She wanted to have a meal with magic mushrooms again.
Very fascinating how much attention there is on Janet Yellen's culinary. I mean, she's from Berkeley for crying out loud, It's
Yeah,
like you got a Fed chair that used to go to dead shows, and Janet Yellen
yeah.
is, I love it though. I mean, I think it's, there it makes them
They
more human.
respect her.
It makes them more human.
Yeah,
Um,
they respect her. They
it
like her.
human, yeah, no, it humanizes them. I think it's a sort of good cop, bad cop thing, right? On the security national,
Yeah.
on the NSA front, uh, they they kind of uh, they try to have a strong position with regards to Taiwan and so on. But on the economic front, they want as much cooperation as can be had uh, without arming the Chinese with unnecessarily with technology that could come back to haunt us. So I think she's there to strike that balance. And who better than the affable Janet Yellen, whom I covered for many years, that to
Yeah,
be
she
that
won't be
that
there
kind of
in
that
the
diplomat.
Yeah, no matter who wins, I don't think she'll be there in the next administration.
No, I don't think so. I think she's already won it. She was supposed to leave already. There was talk that she was supposed to leave, and then she ended up staying. So
There might be a harder line type of Treasury Secretary that are more, negative about G that comes
yeah,
in and,
yeah,
tariffs, etc. So, what do you think about uh, when the market, Pedro? We went from hard landing to soft landing to no landing. Is a recession for this year completely off the table?
I mean, completely is a hard
Yeah,
thing to say, but it seems to be largely off the table. And I think I go back to that fiscal aspect that I mentioned to
r-
you. Like
right.
when you're spending, when that much money is getting shoveled out the door into projects, like it's hard to get the economy to crash, even no matter how restrictive you think monetary policy might actually be. And so I do think that, growth is, continued growth is the most likely scenario. The Fed is not even sure if it's going to be below trend growth or if growth is actually accelerating from this point. That's really the question that people are asking after this, series
Yeah.
of strong jobs numbers and growth numbers. So,
This is a
so
good one, Pedro. Partial totality needs to be incorporated into FedSpeak. So I just wanted to show people that heard you today and
yes,
want to follow you closer than just, you and I talking every quarter. First of
absolutely.
all, you could follow Pedro on X at P. Da Costa. And here's his writings. And Pedro does interviews, talks to Fed people,
Yeah,
and
if you go to the policy tab there on the left, Dale, and just scroll over that, and then you scroll down to the Fed part, policy exclusives, the Fed tab there.
oh, okay,
Yeah.
there you go.
Yeah, that's where you can read all of our content. Although, you got to subscribe. So
Okay.
we have a pretty hard paywall, but it's all there.
Yeah,
Um,
but you have a free trial for
there you
people to
go.
check it
You
out.
can
Did
get
you
a
know
free
you had a
trial, and
free trial?
I think for the folks on this call, it's something that might be of interest because it's a really cool service because you have on the one hand, we have our policy coverage where we have like 14 reporters globally from Asia to Europe to the US and even now in Latin America reporting on central banks very closely. And then we have a markets team that puts out its own original proprietary research in addition to gathering like every sell side view on the street and kind of synthesizing it for
Interesting.
folks. So it's pretty
And,
awesome.
and I believe that there'll be growth in the coming years
Oh,
coverage of
oh,
commodities.
it's happening right now. In fact, we've already
Okay.
got directives to focus more of our stories on the energy sector. So for sure.
Okay. All right. Great. Well, Pedro, I always enjoy having a conversation with you, and we all learn from what you're thinking. And why don't we wrap it with, will the Fed cut rates in June?
I'm gonna say they are not, but
Okay.
I think it's still up in the air. There's still time for if they get two good inflation reports, they'll do it. But I
Okay.
somehow think there's gonna be enough bumpiness between now and then that they're gonna hesitate.
Okay. So CPI this week is pretty key for June because
Most
we're only,
definitely.
a couple months away from that.
Most definitely.
All right. Well, thank you, Pedro, for
Thank you so much,
joining
Dale.
us. We've been talking a few years, um, maybe longer, from when you were with the Wall Street Journal. So it's been a while. I want to thank you for coming in every quarter or so and edifying our face community.
The
Really
pleasure is all
appreciate it.
mine. No, I love the forum. It's great to be here.
All right, everyone. Pedro da Costa, follow him on X at P da Costa and go to mnimarketnews.com and you'll find Pedro's stuff under uh, Fed policy. And looks like they have complete coverage of a lot of things.
Yep, everything that you need. You can see pretty much every area
Yeah,
of the market. So
yeah, credit. There's their research. All right, buddy. Well, good hunting and continued excellent reporting. Really appreciate you guys are a watchman for all of us, and we need them more than ever. So thank you, Pedro.
thank you. I really appreciate it. Happy trading, everyone.
All right. All right. So that's a wrap, everyone. You could join the team in 15 minutes on the morning edge. and we'll see you tomorrow. Good hunting. Let's see if the eclipse has a hangover and has some impact today. We'll talk to you tomorrow. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Good hunting the rest of the day. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.